Good evening. It's the Wall Street Weekly Wrap-Up. July the 6th, the holiday shortened 4th of July week. And I'm your host, John Newquist. And it was a short week. Not much to cover this month, so it'll be fast. But let's get into it because, some news. It was a quiet week. Earnings will be coming out the next week, and the week after, the whole month will be earnings. And let's look at the new highs. Holy smokes, Microsoft. No big news. Nothing coming out that I could see. But we set another high. The hedge funds are really liking Microsoft, Amazon, Nvidia, and Meta, and of course Johnson and Johnson and J.P. Morgan and a lot of other stuff. So they're sticking with what I call really the 10 big stocks that are good. So we're seeing a lot of them jump into this. They know the Nasdaq's hot. The Nasdaq's better than S&P. They got to try to beat the S&P. If you're in the tech fund, you're trying to at least keep up with the QQQs. So look at this. I mean, this is a nice solid chart. Now, of course, it broke out, and it's way above the 50-day moving average. So here's a 50-day moving average. It'll come down. Remember, it goes down every other, 4 years. It gets down to this number. That's where you want to buy it. If you want to ease into it slowly, it's high. Microsoft is high, but it'll come back down. There'll be something that'll shake it and people go down, If you're lucky to buy it back here, it was not so bad. Never got down to 200-day moving average for years. Meta, Threads, 175 million users now. And that's pretty good. And, I have to say I left X/Twitter. Is OnlyFans getting spammed to me like every other post? I mean, full frontal nudity. I mean, what is going on with Elon? Jesus. After you mute 100 people, you realize you'd be just muting all day long, trying to mute these people that are, trying to sell the porn stuff. And if that's when he wants to become the X and X, well, he can have it. I'm not going. So I'm up on Threads myself. I can do everything I do on Meta, except I have to break out the posts. If they charge me $8 a month to put all my rambling into one post, I'd do it. But Elon's losing money, and I think as it starts to dwindle, he's going to lose the best. All this crap doesn't chase away the bad users. It chases away the people who actually try to work on content, and that's not in there. But look at this. It broke up of this trend. That is hot, and like I said in Threads post, we bought it in 2022 when it got that chance to come down, and we got it below once a decade gift, I call it. The averages, look at the NASDAQ. Wow, 22%. Here's the QQQ chart. It is on fire. People, oh yeah, it's going to go up a little bit. Oh, you want to take your profits now, God, get out of here. Look at this thing. It's hot. Will it be at 22% at the end of the year? I bet it will be. It could be even higher, 25%. Remember, if you get 8% of returns on your money, you are doing well. That is historical S&P average. Our goal is to beat the S&P, and we're easily beating the S&P because we got the best of the NASDAQ stocks. And that's in there. And the Dow, of course, some of the industrials are dragging it out. But that's it. So we're doing good. Indicators, 2-year note, almost one time hit 5 a couple weeks ago. Now we're down. Oil's still hanging around 83. It's tough. And gas is still coming down, but still above $2 a therm. Gold almost at $2,400. Silver, here's our chart on silver. Look at this thing. It's doing its bowl. This is our cup. Here, this is our handle, low handle, cup. And we don't know how it's going to go, but it's at 31. It was almost at $32 the other day. And copper doing well. So metals and the commodities definitely doing well if you're in that. Again, we got gold through FCX, copper through FCX. Tesla's, he announced shipments went up slightly, and I looked at it. It went up. You go down here, this was the reaction this week. So the reaction is going up from 200 to 250. So he dumped 20% on really no news. He's got a lot of plans. He wants to do this Grok on Twitter, a better AI search engine. He's going to spend $3 billion on it. Well, that's fine. He's late to the game. He's not even in play yet. And nobody's buying his stuff. Nobody's subscribing to it. So, and then his Optimus is going to go out and do all this great things. What, 2030, 2035? Amazon's got the robots right now. They're already picking in the warehouse. So, you got to look who's making the money with the stuff that's happening right now. It's ChatGPT. Everybody else like Perplexity, Claude, and Gemini. And Gemini is independent, really, not there for the money. So We'll see. Bitcoin, Mt. Gox, they went bankrupt, took their assets, and I have to remember, it goes back. I mean, it was probably a lot cheaper for Bitcoin, but whatever Bitcoin they had, they didn't release. They're trying to get through the lawsuits and the creditors. Now they're selling it back, and Bitcoin's, like I said, was at 65,000, and now it's down to 56. So here we are at $73,000, and we're down 20%. That's a painful thing. This is when our ETFs came out. So this is painful for a lot of people, but this is the time if you're going to start easing into Bitcoin, you're not going to get a better deal. I mean, will it go down? Our next resistant level is 50. Already broke this one. This one they said, oh, it'll never go below 58. Well, they did. So we don't know where it's going. But, this will stop. Once Mt. Gox pays back and everybody sells whatever Bitcoin they came into flush with, then it's going to be back to the ETFs. So, how high it will go, I always hear Tom Lee, so I'll go to 150,000 maybe in the next year. I don't know. But this is the last of the big ones. The other one, the government of Europe and the United States have billions of dollars in Bitcoin. And they may make a deal, So let's take a look at the, I got to go, unemployment rate. Yeah, I like this. Sometimes you get these charts. I forgot who I got it from. 4.3. No, it went up 4.1 from 4.0. So that's good. It means market is going to cut down on the wages a little bit. As more unemployment goes up, the workers are fighting for the fewer and fewer jobs, and therefore it's going to lower the prices and stuff. Who gets screwed? Well, the workers. But this is a good market. I always remember if you were happy at 5%. I grew up 5% was good employment. So if you're out there, you want to work, you can find the jobs. Just may not be as paying as much now for a starting job. And they said the Fed's going to give 75% basis cut meeting in September. Ooh, I don't know about that. But we'll see. We'll see. And the sector we're featuring this week is going to be industrials. I didn't really flesh it out. I watched certain ones, and I obviously missed. We have Coke and we have LMD. These are companies that make things. I've tried to change the thing. I watch the auto company. So if you want to see the stock that's done real well this quarter, it's in Toyota. In the second quarter. Coke is good. Pepsi was negative, remember? Or not negative, but 2.3. But they did. How was it? Revenues were up. I think earnings were down a little bit. And again, as this fleshes out, when we come back about 13 weeks, I'll have all the data and everything else. And again, heat map. Well, other than the video, only down 2%. But look at everything. Microsoft up. Google's up, Meta up a lot, 5%, Amazon up, Walmart up. I mean, these are all our stocks. I mean, that's not bad. You go back down here. Somebody showed me a thing about Intel, and I don't see Intel on there. Yeah, here it is, a little bit of green. Intel's down like 36% this month, or this year to date. Year to date, 36, one of the worst of the S&P 500. JP Morgan a little bit lower, but FCX mates it. All the oils took a hit. Really, oil's at 83. That's not really a bad hit. So Merck's green and Pfizer's green, so not so bad on the healthcare side. I mean, more greens than reds, and it's the start of the year. The earnings, I think, will be pretty good. I mean, we're getting through the economy, and it shouldn't be that bad. So I'll see you next week. Have a good week. Stay cool. It's going to be a scorcher across most of the country again. Bye.